Hello and welcome to our YouTube channel, The Loophole, the Offshore Loop. The Secret Journey of Dirty Money. This documentary explores financial crime and corruption. No graphic content is included. Every year, trillions of dollars vanish from the world economy, slipping through invisible cracks in the global financial system. The money doesn't disappear. It just moves somewhere the law can't follow. How does dirty money become clean? And who's helping it travel? Offshore finance isn't new. Tax havens have existed for over a century, offering secrecy and low taxes to those who can afford them. But in the past 3 decades, something changed. The system became industrialized, turning money laundering from a criminal skill into a professional service. Today, an estimated 2 to 5% of global GDP moves through illicit channels each year. According to the United Nations Office on Drugs and Crime UNODC Global Report on Money Laundering, that's up to $4 trillion. It funds everything from drug cartels to corrupt politicians, terrorist networks to human traffickers. And it flows through a network most people never see. The offshore loop, the modern offshore system, began taking shape in the 1970s. London's financial district, known as the City, emerged as a hub for moving money beyond the reach of national tax authorities. Small island nations in the Caribbean and Pacific realized they could profit by offering total financial secrecy to foreign clients. The Cayman Islands, British Virgin Islands, and Panama became household names in financial circles. By the 1990s, globalization and digital banking made transfers instantaneous. What once required briefcases of cash now happened with keystrokes. Shell companies, entities that exist only on paper, became the primary vehicle. According to reporting by the International Consortium of Investigative Journalists, over 2 million shell companies are registered in tax havens worldwide. ICIJ Offshore Leaks database. Most are legitimate, but thousands exist only to hide ownership. The 2008 financial crisis exposed parts of this system. Banks like HSBC and Deutsche Bank were later fined billions for helping clients evade sanctions and launder money. U.S. Department of Justice settlement records. Yet the offshore loop continued. The Panama Papers in 2016 revealed how politicians, celebrities, and criminals used Mossack Fonseca, a Panamanian law firm, to hide wealth. 11.5 million. Leaked documents showed the inner workings of offshore secrecy. Then came the Pandora Papers in 2021. This leak was even larger. Nearly 12 million files from 14 offshore service providers. It exposed how leaders from 35 countries allegedly hid assets worth billions. The pattern was clear. The system wasn't a few bad actors. It was infrastructure. Investigative journalists have documented the offshore loop's basic mechanics. Money typically starts in a country where it was earned illegally or should be taxed. It moves through a series of transactions designed to obscure its origin. Shell companies in different jurisdictions buy and sell assets, often real estate or art. Each transaction creates paperwork that appears legitimate. Financial intelligence units report that beneficial ownership. Knowing who truly controls a company remains the biggest challenge. Financial Action Task Force reports. Many jurisdictions don't require disclosure. Nominees, people paid to be listed as owners, make tracing nearly impossible. According to academic research from the Tax Justice Network, corporate secrecy in places like Delaware, Nevada, and South Dakota rivals traditional offshore havens. A Tax Justice Network Financial Secrecy Index. Banks play a crucial role. They file suspicious activity reports when transactions raise red flags. But enforcement varies wildly. The FinCEN files leaked documents from the U.S. Treasury's Financial Crimes Enforcement Network revealed that major banks continued processing transactions for suspected criminals. Even after filing reports, BuzzFeed News and ICIJ investigation. The documents showed over $2 trillion in suspicious transactions between 1999 and 2017. Enforcement actions confirm some allegations. In 2023, Binance, the world's largest cryptocurrency exchange, pleaded guilty to money laundering violations and paid over $4 billion in penalties. U.S. Department of Justice press release. The case highlighted how digital assets created new channels for the offshore loop. Defenders of offshore finance argue the system serves legitimate purposes. Asset protection, estate planning, and operating international businesses all benefit from offshore structures. They note that secrecy isn't the same as illegality. Privacy, they say, is a right. Some economists point out that developing nations sometimes benefit from offshore centers. They create jobs and financial expertise in small island economies that have few other resources. Not every offshore account represents crime or tax evasion. There are also gaps in what we know. Leaked documents capture only what gets leaked. The full scale of illicit finance remains estimated, not measured. Attribution is difficult. A politician's name on company documents doesn't always mean they own it or benefit from it. Nominees and intermediaries blur the lines. Some cases involve disputed facts. Different jurisdictions have different definitions of legal tax avoidance versus illegal evasion. What's criminal in one country might be permitted in another. The offshore loop creates invisible victims. When corrupt leaders hide stolen state funds, it's ordinary citizens who suffer. Hospitals go unbuilt. Schools lack teachers. Infrastructure crumbles. The World Bank estimates that corruption costs developing countries billions in lost tax revenue annually. Money that could fund essential services in countries plagued by drug violence. Laundered cartel money finances weapons and operations. Communities are torn apart. Families lose loved ones. The violence feeds on itself, sustained by an endless flow of hidden cash. Victims of human trafficking find themselves trapped in systems financed by laundered money. Their exploitation becomes a business model, protected by layers of corporate secrecy. When law enforcement can't follow the money, they can't dismantle the networks. Even in wealthy nations, the impact is felt. Tax evasion by the richest citizens shifts the burden to everyone else. Public services deteriorate. Economic inequality widens. The social contract phrase, when some play by different rules. Financial crime. Investigators describe the offshore loop as a circulatory system. Money is the blood. Shell companies are the arteries. Banks are the heart. And tax havens are organs that filter out transparency. When the system works, dirty money gets pumped in one end and emerges clean on the other. This matters because money is power. Hidden money is unaccountable power. It corrupts elections, distorts markets, and undermines democracy. According to legal scholars, financial secrecy enables a shadow economy that operates parallel to legitimate commerce. Harvard Law School research on illicit finance. The system persists because of misaligned incentives. Individual jurisdictions profit from hosting offshore entities. Banks earn fees from wealthy clients. Lawyers and accountants build careers servicing the system. No single country can fix it alone. International cooperation remains slow and incomplete. Technology adds complexity. Cryptocurrency promised transparency through blockchain. But privacy coins and mixing services created new anonymity tools. Digital assets move instantly across borders, often faster than regulators can track. Here's what we know. The offshore loop is real, documented, and massive in scale. Trillions flow through it annually. Some of that money represents legitimate business, but a significant portion funds crime, corruption, and evasion. Leaked documents and enforcement actions confirm the basic structure. What we don't know is harder to pin down. The full extent remains hidden by design. Individual cases often involve disputed facts and competing legal interpretations. Attribution is rarely simple. The system didn't appear overnight. And it won't disappear quickly. Several scenarios are unfolding. International pressure for transparency is increasing. The OECD's Common Reporting Standard now includes over 100 countries sharing tax information automatically. Compliance is improving, though enforcement remains uneven. Confidence level: high beneficial ownership registries are spreading. The UK, EU, and parts of the US now require disclosure of true company owners. Criminals adapt, but the cost of hiding increases. This trend will likely continue. Confidence level: medium to high. Cryptocurrency regulation is tightening. Major exchanges now face the same rules as traditional banks. But decentralized finance and offshore crypto platforms create gaps. The cat-and-mouse game continues. Confidence level: medium. Some jurisdictions will resist change. Small nations dependent on offshore revenue have few alternatives. They'll maintain secrecy as long as possible. Confidence level: high. The fundamental challenge remains. As long as hiding money is profitable and consequences are limited, people will find ways to do it. The offshore loop may shrink, but it won't close completely. Confidence level: high. The offshore loop isn't a conspiracy. It's a system built piece by piece that serves some interests while harming others. Understanding how it works is the first step toward deciding what, if anything, should change. The money flows continue, hidden in plain sight, waiting for the next leak to bring them briefly into view. If you want to understand how these systems actually affect global economics, watch our next video. Tax havens explained why small islands control billions. It breaks down the mechanics even further. Source notes and disclaimer. This script draws from publicly available reports, including the Panama Papers, Pandora Papers, FinCEN files, investigations by the ICIJ, United Nations and Financial Action Task Force publications, and court records from enforcement actions. Details about ongoing investigations and unproven allegations are labeled as such. Information is current as of late 2025, but may be incomplete. We encourage viewers to consult multiple sources and recognize that financial crime cases often involve complex, disputed facts.